Good morning, everybody. We're going to get started in just a minute, as usual. Thank you all for being here. Just getting a couple more things organized, and then we should be good to start. Alrighty. All right. Good morning, everybody. Yeah, we're going to get started in just a minute. Just waiting for people to come in through the door. Alrighty. Perfect. All right. I think we're good to go. Let's get started. Yep, excellent. We're ready to start. Okay. Good morning, everybody, and happy Tuesday. It feels like a Wednesday at least after yesterday. Hope everyone's doing well. I'm Serge Berger from the Study Trader. This is our Set the Market morning show. What we do here is we're going to take about 10 to 15 minutes to go through our sort of top things, top of mind, and with that, let's get started. I want to start off with sort of a bit of a bigger picture reminder, and what we have seen over the past number of weeks is not really a pickup in volatility, although it has felt like that. I hear lots of people tell me how volatile things are. Things aren't volatile. Things are choppy. And there's a big distinguishment there. So I just wanted to bring that up. And in fact, if you look at the VIX, which is what you're looking at here, you can see the VIX is comfortably still in the high teens. Volatile would be, 30 plus. So things aren't volatile, things are choppy, and it's very much a trading opportunity here, mostly intraday. It's you can see that swing trades right now are hard to make money with because things gap up one morning and then gap down the next morning. So we're just kind of in a trading range. And now I want to address that trading range again in just a minute. But what I think we're seeing a lot of chop. Now, when the volatility starts to increase or choppiness starts to increase, then what ends up happening is that the predictability of outcomes starts to decrease, and lots of people end up making premature decisions, and over time they really burn up their account, and that's really what I think is going to happen here this year. So I think those people that blindly buy dips are I keep saying it, are really going to get hurt badly this year. And as a result of that, the range of possible outcomes actually goes up, right? So basically the dispersion of what might happen, the range of possibilities goes up. So in other words, if you look at let's just go back to the SPY, which we mentioned yesterday, this chart. Look, we're just trading in a range. And so, bullish or bearish, the reality is we're in the same spot we were, weeks ago, and really we're just in this trading range still post the U.S. election in early November of last year. So if we can kind of get our head around that, then we keep ourselves from pretending something's happening when it's not. In other words, seeing things that really aren't there. And so I think that's going to be really, really important this year. However, there are things that are happening, and one of the things that's happening is, for example, The Hang Seng Index, the HSI, overnight is once again up 2.8%. Now, if you want to add a bunch of lines on here to make this a bit more digestible, I suggest let's do so. And what you can see is essentially, finally, a potential sort of re-emergence of sort of animal spirits after that initial rally we saw in October of last year, coming out of September when China announced different forms of stimulus, and so we're kind of now seeing something like this take place now. I don't know how quickly this accelerates. What I do know is that if I look at the HSI Hang Seng Index as an index, we are coming out of this choppy period, and we are the TST trender, which is our momentum indicator, as of yesterday, as of today's session, which is kind of already done in Japan, in Hong Kong. We are now getting a valid momentum breakout signal. So that's interesting, because if we juxtapose this into like US listed ETFs, then we might see something similar taking place today in like FXI or KWEB, which is the ETF that tracks Chinese internet stocks. And this thing is choppy, so you have to be careful. But I do think the outperformance here, again, let me just go back to the HSI, to the clean chart, is interesting. So we really like this idea. And again, there's a lot of money, and I believe I mentioned this last week. There's a lot of money that is looking to essentially reallocate money into different parts of the market, right? And so there's this huge overallocation trade that's still taking place in the Mag 7 stocks, and there's lots of money that's looking to allocate in part, right, out diversify away from that, and China might be one of them. I think we could see a lot more money flowing into China if the dollar were to weaken a little bit. The dollar, of course, yesterday, if you were watching, had a very strong day, but it's choppy. As Matt is saying here, the currency market's very choppy. And, I know this doesn't resonate a lot with people because it requires doing work, but the currency market is the number one thing that we need to watch in order to get the equity market right. So if we can see this volatility in the currency market, which is a lot of volatility, relatively speaking, intraday volatility, then we can only imagine that should be reflected over in the equity market as well. So the currency market is confirming what the equity market's doing. In other words, it's actually the telltale of what equity markets should be doing. So that's what's going on here. Let me see what the other things were here. Let me quickly check one more thing. I also wanted to look at, so that's one opportunity, right? So you look at FXI, KWEB, again, these are ETFs that track the Chinese equity market, and again, expect breakouts there today on the back of what the Hang Seng Index did last night, right? So this is like a forward-looking thing, to what's going to happen. So I think this is interesting. Momentum seems to confirm this. So I really like this. And then the other thing I want to show you is really away from sort of the indices, and that's a chart that I crafted for you guys here. And so what this is, it's two lines. One line is the 10-year yield, and that is the Treasury yield. That's the top line, the purple line. And at the bottom, you have shares of Pulte Homes. It's a home building stock. And if you look at this closely, and I realize you may not be able to see this, so I'm just going to read it to you. But the point at which Pulte Homes started to top in October is also about where 10-year yields started to break and hold above 4%. So, and you can see what's happened since. 10-year yields have continued to push higher. We were as high as 4.8. Now we're down at 4.5. And so, we had this this big move higher in yields, and it's being reflected in home builders essentially trading weaker, particularly in this case Pulte Homes. So if you kind of take a step back from all of that and only look at Pulte Homes as a stock on the charts, you can be quite creative here and just see that it's starting to and has broken below trend. Okay, so to me and to us here, this is probably an opportunity to take a look at some of these parts of the market here from the short side. Pulte Homes is also breaking down here. It had another gap down yesterday, so it could start to make lower lows. If that's something that wants to look at that, potentially bear call spreads make sense. More aggressive trader would put on some sort of a bearish put spread, like long volatility, or certainly if one is long the stock, then might be an opportunity to take some off. In fact, I was looking at this earlier, and I'll quickly show you this. Pulte Homes is actually no longer a bullish trend on the market rover. So for those of you guys that use the market rover, and I can only encourage you to do so, look at how the trends have changed so cleanly. So if I was looking at this, I would have started to buy Pulte Homes in January of last year. I would now be out of it, about 140% higher, and now it's neutral. There's nothing to do, right? Aggressive traders would maybe go short based on the analysis I just showed, but other than that, it's certainly no longer in a bullish trend. It's in a neutral trend. And so now we wait for the next trend, whether it's bearish, meaning a red background color, or it goes into a green background color, back to a green background color. We will see. We'll be open-minded. So knowing what the trends are really, really important to understand in this environment. So I would encourage everyone to be mindful of those trend changes. Here we are. Perfect. So that's all I want to do. We're going to meet all of you guys that are Inner Circle members and Market Rover members this week as well in about 7 minutes over in our Kickstarter session. In our Inner Circle session, we're going to go through, run through the Market Rover today. We're going to go through all sorts of opportunities using the Market Rover here in about 7 minutes. So I'm going to go and prep for that. And I will see you guys in a few minutes over there. As always, please make sure you subscribe to the channel. You give us a thumbs up like that allows you to be alerted in real time when we go live. And so you don't miss any of this. Also, when we have new podcasts and be able to stay on top of everything. So please do that. Thumbs up like and subscribe to the channel. And we'll see you guys back here tomorrow morning. All Market Rover Inner Circle members will see you in about 6 minutes over in the member session. We'll see you there.